All right, let's talk about something that has completely changed the game for anyone who's ever looked at the stock market and thought, yeah, that's not for me. We're talking about fractional shares. I mean, of course, right? You see these giant, world-changing companies everywhere you look, and you think, man, I would love to own a piece of that action. But then you check the price.
And you see a number like this, over $2,000.
And that's the gut punch, isn't it? That huge price tag is just for one single share. It can feel like hitting a brick wall. Yeah, that sticker shock is a totally real thing. It's honestly one of the biggest reasons people feel like investing in those big household name companies, what they call blue chip stocks, is just, well, it's out of their league. But here's the thing. What if you didn't have to buy the whole thing? What if there was a way to just order a slice of that stock instead? Well, that is exactly what a fractional share is. It's literally just a piece of one full share. It's not some weird different kind of stock. It's just a smaller slice of the very same ownership in that company. You know, this is probably the best way to wrap your head around it. Buying a full share is like having to buy an entire pizza. But maybe you don't want a whole pizza. With a fractional share, you're just buying a slice. You get the exact same flavor, the same experience, just in a size that actually makes sense for you. Or hey, here's another one for you. You don't need to buy the whole cow just to enjoy a fantastic steak. It's all about making high-quality stuff accessible to everyone, in a size and at a price that works for them.
So, okay, you get the idea. But how does owning just a slice actually work in the real world? Let's break down the mechanics.
Okay, now this is the most important part to understand. Your money grows proportionally. A 10% gain is a 10% gain, period. It doesn't matter if you put in $2,000 or just $200. If that stock goes up, your slice goes up by the exact same percentage. The math is identical. And it's not just about the stock price going up. You get the other perks of being an owner too. Things like proportional dividend payments. So if the company shares its profits, you get your little piece of that. And hey, depending on your brokerage, you might even get shareholder voting rights. Let's make this super real for a second. Let's say you want to invest in Visa, but a single share is over $330. No big deal. You can take your $200 and buy a little over half a share, 0.5939 shares to be exact. And just like that, boom, you are officially a part owner of Visa. It's that simple. Okay, so we've got the what and the how down. Now let's get into the fun part, how you can actually put this amazing tool to work with some smart, real-world strategies. This right here is the most powerful part of the whole thing. The old excuse of, oh, I just don't have thousands of dollars to get started, that's just gone. With fractional shares, you can begin with whatever you've got, whether it's $200, $50, or even less. And because you can invest in these small, regular amounts, it unlocks one of the most powerful, stress-free strategies out there, especially for new investors. It's called dollar cost averaging. It sounds kind of technical, but trust me, it's so simple. You just decide on a fixed amount of money, let's say $50, that you're going to invest every single month. That's it. When the stock price is down, your $50 automatically buys you more slices. When the price is high, it buys you fewer slices. Over time, this just naturally helps you buy low, and it smooths out all those crazy ups and downs of the market. It's a brilliant set-it-and-forget-it way to build wealth. Now, let's be real. It's not a perfect system. Like any financial tool, there are pluses and minuses, and it's really important we take a balanced look at the whole picture. So the pros, they're pretty clear, right? It makes expensive stocks accessible, it's super easy to diversify even with a little bit of money, and you get those dividends. But on the flip side, you've got to know that not every single stock or every broker offers this, and sometimes they can be a bit tricky to transfer if you want to switch brokerages. So what's the big takeaway here? It's simple. Always check the specific rules and any fees with your brokerage before you dive in. So, after going through all of this, what's the one thing you really need to remember? It's this: the wall has been torn down. Investing is no longer some exclusive club just for people with thousands in spare cash. Fractional shares have truly, finally, made owning a piece of the world's biggest companies possible for pretty much everyone. I mean, just look at this. This slide really says it all, doesn't it? The old way was a locked door that required a huge key. The new way, it's an open gate. It lets you start building your future with whatever you have right now. This is a fundamental, massive shift in how we can all approach building wealth. Which kind of leaves us with this one last fascinating question to think about. For so long, stock ownership was in the hands of a relative few. But now, anyone with a phone and $20 can become a part owner of a major corporation. So, if absolutely anyone can become an owner, what does that really change for the future of Wall Street?